Of course, we have seen incredible weakness, as Bell just talked about and showed us with those charts when it comes to Asian currencies. We are headed towards another Bank Indonesia rate hike today. This chart on the Bloomberg just showing how that's really not helped when it comes to the weakness of the rupiah. How much more can central banks across Asia, including Indonesia, do here?
Yeah, thanks. I think that's a really difficult question. I think with regards to the central bank reaction functions, we've seen so many of them, still focused on inflation, and at the core, that remains their primary mandate, their primary reaction function. But I think increasingly we're seeing central banks, including Bank Indonesia, react to things, react to the external conditions imposed by FX weakness. And I think what Bank Indonesia should be telling today, should be telling the markets, is that FX weakness, particularly in the rupiah, is potentially starting to become a concern.
And of course, that happening at a time when we continue to see dollar strength, and you don't think that there will be a Fed pivot anytime soon. How crowded is this long dollar positioning, and will this change anytime soon if we have the Fed very firmly on that aggressive hiking path?
Yeah, I think that's really the central question that a lot of the people in the markets, particularly on the FX side, are thinking about. By any measure, this long dollar trade, dollar valuations have been so stretched for such an incredible period of time. You've had the markets continuously trying to predict the Fed pivot and call for a risk rally, a selling of the dollar for so many times this year, and so many times have been proven wrong. So it seems like what we're going to need is not only a turning point in the economic data, you also need a turning point in the Fed's reaction function in order to really unlock some of that, that sort of the extended valuations, and for that positioning to really reverse. But I think, as we've seen so far this year, these bear market bounces, they've failed to deliver on that. And so I think what's really going to be key is that you need, the lessons from emerging markets for the Fed is that you really need to definitively see a peak in the inflation data, a stabilization in the inflation data before the Fed can really carry through with that pivot.
Yeah, the big question, I guess, is when that is going to happen. But it's not a matter of if, is it? Eventually, we're going to get to that point. And when we do you imagine things could unravel fairly quickly?
Yeah, definitely. I think there's a lot. Sort of the positioning, as we mentioned, has been so one way and so one sided for such a long period of time. And I think particularly in the Asian space, you look at things like dollar Korea and dollar yen. Those gains in the dollar against those currencies have been so extended for such a long period of time. It's basically been a one-way trade. I think that the positioning there is probably the first ones that could unravel. And I think once we see that unlocking of a bit of dollar weakness, I think the rally there could be pretty fast and sharp. But again, as you mentioned, the question really is a question of timing. When are we going to see the turn in the economic data? When are we going to see the turn in the Fed? I don't think that time is now.
I just want to get your thoughts on the yuan as well. The offshore yuan hitting a low that we haven't seen since August 2010. Where is the bottom here, and how do you judge policymakers in terms of the job they're doing in managing its decline?
Yeah, I think so. What we've noticed over the last couple of months is that despite the fact that investors everywhere are thinking about the bearish fundamentals happening in China, with very subdued economic activity and sort of this persistent COVID zero policies that are really sort of locking things within the country's borders, what we've noticed that is on the currency side, a lot of that currency weakness actually has been driven more so by the dollar leg in the dollar yuan pair, as opposed to yuan weakness per se. So I think so long as you continue to expect that the dollar won't let up, you can think that either the dollar is flat or moving a little bit stronger, then I think the dollar yuan still has room to push higher. Initially, every time we come out with new sort of estimates, new forecasts about where dollar CNH is going to trade into, they keep getting broken. So initially we were thinking 725. That's probably has scope to be revised a little bit higher given the recent price action. But that being said, I think the PBOC has been doing a a pretty good job in terms of managing the move higher. You know, they've come out and from their policy stance, it's pretty clear that they're not defending any specific levels. It's not quite a red line in the sand kind of situation. Rather, they're managing the volatility, they're managing the liquidity, they're managing the speed at which the onshore and offshore yuan depreciates. And I think for them, that's the main objective at this juncture.
Yeah, especially if you have the party Congress going on and you want stability, right? That much sought stability by policymakers. Are you finding anything interesting coming out of President Xi Jinping's speech or what you expect this week that could change your calculations on how you perceive the Chinese markets?
So far, unfortunately, no. We're not seeing anything that's particularly informative for the markets, coming out either like last Sunday or throughout this week. I think, maybe looking at the structure of the new standing committee and sort of the Politburo that's going to come out of perhaps, this week's decisions, that's going to be something to look out for. But, we have to remember fundamentally that the Party Congress is about setting, medium to long-term goals. That's 5 to 10 years, right? And FX markets or even bond markets don't tend to react to those sorts of decisions. But that being said, I think one thing that we are on a lookout for is how COVID-0 policy will be evolving, will be changing after the Party Congress. So from our perspective, that's not going to be something that's decided at the Party Congress per se, but it's going to be a decision that's independent of the Party Congress and dependent on local factors. Things like how quickly can China develop its own and roll out its vaccine, how the balance of how COVID numbers are evolving in the country, but also things like will the WHO decide to remove the sort of pandemic label on COVID. So that's something that I think markets and ourselves are really on a lookout for, not this year, but perhaps throughout the course of early 2023.